You think that you can set the ATM settings. Remember I said I'm not going to go over that when I talked about the ATM settings. It said delta price.
Yes,
The
ma'am.
delta price is your normal price that you're used to seeing it in Forex. So that's what delta price is. So if it goes in points, it's going to be in points. If it goes in pips, it's going to be in pips. So when they say delta price, they're referring to the price that you're used to seeing in Forex, the way you're used to seeing it in Forex. So, but I'm going to give it a few more minutes, and then I'm going to go through, for people that, again, this is for people that trade one account at a time. I'm going to go through because
they may be over there in that beginner's class probably, because I don't know.
Oh, today is intermediate though.
Okay. But
Monday and Wednesday.
Okay. Be here.
Okay, Monday and Wednesdays, and I said intermediate. So let me just see.
And sorry about that, Robert.
That's okay.
You okay?
Be sitting there sometime talking about.
You're all right.
Let me see. Let me go in, and I'm gonna open. I don't think it's gonna let me open up 2 meetings at one time. Let's see if it does. I don't think it. This is this one. Let me see if it's. Let me see if it lets me. Oh no, I can't open both.
I'll send them a text messages. The ones right.
And Ms. Denise, I think one of my biggest problems also is understanding the trend and the four dots. And then
say it again.
My biggest problem is understanding the 4 dots.
And it's not, it's just a trend.
Well, I was just trying to see, do I wait for it once it gets that point, and when it's coming back, I can
go through that again. I'll go through that again because, okay, so remember, everybody has a different level of trading. So some people are more aggressive than others, right? So because I have a wide, people with different levels, different groups, I'm going to teach it on the most conservative level. And that's what I'm saying. Like, so a lot of times you'll hear me say, well, if you're an aggressive trader, you may get in here. But if the reason I say that is because that's an actual entry point, but it's for the more aggressive. That means that when you're a more aggressive trader, you have to really know what you're doing, like, because you can get caught up in some losses. Oh, I don't want to end the meeting. So that's the catch. Let me show you what I mean. So what you'll hear me say sometimes is, you'll hear me say sometimes that, let me say, for instance, let me give you a point. So let's talk about this right here, just what we're on NASDAQ right here. So looking at this, we would say, oh, it's going, it was going down. It was going down. It did a pullback, and now it's back. It's returning back, right? That's what we would say as a. Let me take this volume off too. As a trader, a more experienced trader, we might say that, right? So, and it is. It probably is. You see the drop or whatever, but for the person that's not as experienced, you don't know that this pullback is over yet because it hasn't made a lower low to here to confirm. For a person that's maybe not as experienced, you probably know, yeah, it could go here, but because it hasn't closed below here, it could go back up too. You don't know.
Right.
So for a person that that's less experienced, that may not understand that this can go back, it could pull back on you and go up if you're trying to go down, because it hasn't validated through the swing low. It hasn't passed it. So what I'm saying is this was going down, right? It was going down. We have our downtrend there. So let me just show you. This was going down, and then it violated this downtrend right here. So then you say, okay, well, if it violated the downtrend, it started going up. So if I put my path on this and I say, okay, boom, 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 that was an uptrend, but now it made a lower high. So it's no longer going up. So is this, you want to find out, is this pullback really over? Let me change the color of that. Is this pullback really over? Well, I don't know, because you haven't, the way that you would know for sure that this pullback is over is if it made another low, because that would mean that it's continuing in the downtrend, right? So
Right.
a lot of people will tell people that you can get in, you know, at these crosses or whatever, you know, you can use the trend clouds to get in at these crosses. But for me, that is not it's a possibility, and you could get some pippage off of it. But are you going to get safe pippage is what I'm looking at. Because now that it violated this uptrend right here, now I'm going to start my count over. So now my count is going to, because I'm going down now, my count is going to start from the high. So now I'm going this way, right?
Right.
So I was going this way, but now I'm going this way, and I'm starting here. So I have 1, 2, 3, 4 before, because remember, it takes 4 points to confirm a trend, to say it's in a trend.
That's right.
You cannot say it's in a trend until you have those 4 points.
And
Now,
it would be below that ultimate support. Is that correct?
not necessarily. That if it's below this support, that means it's continuing this trend. Doesn't mean that this wave is not in a downtrend, because this wave, this one could do this. Let me show you. This one could do this. And that would have still been a downtrend, because you have 1, 2, 3, 4. But oh, would have to probably do something like that. Oops. Like that.
Right.
And that was still, that wave was still a downtrend, right? But it wasn't this downtrend over here, this swing high to low, it didn't continue that downtrend. You get it? You get the difference?
I do.
Okay. And so for me, if I know that I don't have that, this bigger picture hasn't been confirmed, when I'm trading over here, I'm going to be more careful until it does confirm the bigger one. So that's what I mean when I say I want my 4 points, because the bigger picture trend hasn't been confirmed. I'm in a fractal wave. I'm in another, you know, wave of that trend.
Now,
you know
so
what I'm
you
saying?
would wait until it
Not
pulls.
necessarily. I'm not saying that I would wait. I'm
Okay,
saying I
okay.
teach you guys why I wait.
Okay.
Because remember, I say all the time, I'm a more aggressive trader, but I don't trade aggressively with you guys because everybody's trading at different levels. I would know that I would know that this continuation isn't confirmed yet. If I got in, I could get in right here. I could get in here. Let me show you. I wouldn't have a problem. Let me see. I wouldn't have had a problem getting in here, right? After, well, I would say for me here, or really here, after it broke out of here. I wouldn't have a problem with getting in here, right? But I'm not going to teach you guys that, because getting in here, it broke this last high here, but it's this last low here, but it hasn't broken the continue. This is the low that it needs to break to say that this swing is continuing. So I'm going to teach you guys the more conservative, but please know that, yeah, it could go all the way down here and break. Now I know for sure that it's continuing the downtrend. So when you get in a trade after pulling back from here, it's fine. But remember, the reason I'm saying that is 1, 2, 3, you haven't gotten 4 yet. You still don't have 4. Now, and a lot of people are looking at like, I'm FOMO, I'm missing all of this that I could have been in the trade. You could, but you would have been in the trade unconfirmed. I'm not saying that it's not a good trade. It's not a good trade. It's just, it's an unconfirmed trade for me based on my confirmations, which, and the reason I base it, you know, because, you know, you heard Howard and Jay last night talking about Elliott waves. Now, based on Elliott waves, remember, we're in fractals. And so you're, no matter what time frame you're in, they always make up a bigger wave on a higher time frame. So the lower time frames make up waves on a bigger time frame. And I don't want to get too technical about Elliott waves, but this, you know, on a lower time frame, like if you went down to the 15-second, you would have your 4 points possibly. You see what I'm saying? If I go down to the 15-second, I might have my 4 points. I don't know. Because I'm not trading on that level. So like here, okay, 1, 2, 3, 4. You do have your 4 points here. So you could enter here and go on down on a lower time frame. You see what I'm saying?
Yes,
but
I do.
Okay. So, but based off of the 30-second, which is what I got in on, what, you know, we've been trading on, I don't necessarily have my 4 points yet. And that's what I refer to in the points. But the only reason I say 4 points is because, remember, I gave you the determination for me is this. My logic sits that if I'm going to trade, how do you make money in trading? You make money in trading when the pattern of the candles go in the same direction and they continue to go in the same direction, right? When candles go in the same direction, that is called a trend. So for that reason, if I make money, so I deduce that I make money when the chart is in the trend. So since I know that I make money when the chart is going in the trend, then I want to trade when it's trending. It just kind of logically thinking, that's how it works for me. I want to trade when it's in a trend because that's when I'm able to make money, right? So
Yes,
for me, the basic information that I learned is in order to know if you're in a trend, you have to have 4 points. If you're in a downtrend, you have to have a low, a high, a lower high, and a lower low. That's 4 points. If you're in an uptrend, you have to have a high, a low, a higher low, a higher high and a higher low. That's 4 points. So for me, that's why I go back to, I know I'm in a trend if I have 4 points. Now, if I have 4 points, I know I can make money because I'm in a trend. So that's why. Now, there's a lot of ways that you can make money trading. They have EMA crosses. They have all kinds of strategies. But for me, the safest strategy that I look at is if I know I'm in a trend, it's going to continue going in the same direction, which means I make money. Got it? Let me turn this heat off.
Got it.
All right. So that's what the 4 points are about, just so you know. All right. All right.
Okay.
Hi, everybody. Were you guys in the wrong class or just coming in different times? I wasn't sure if there were people in the other meeting waiting, and I couldn't. If I would have logged out, it wouldn't let me log into the other one. So
Okay, I do have a quick question
yes, Howard.
about what you just explained. All right.
Okay.
This down, okay, you saw the first up move that got negated.
Mhm.
So now 1, 2, 3. Let me annotate so that I can ask. Okay, so this will be 1, 2, 3. So now you're waiting for this to come up and not pass here and take it down. My
Correct.
question is though, this, I'm looking at this right here
Mhm.
as the shouldn't this pass like here and then come like that?
It could.
I mean,
That's so that I'm not, remember when we say what we're looking for, I just drew that based on where the price was at that time. So I just drew this because when I drew this, I was telling him that it doesn't have to come down here and break here. It could come up here and continue going up. And then if you would have gotten this sell, you just got wiped out. That's what I was telling him.
I get you.
Okay. So you walked in a little late. That's all.
Okay.
So I was telling him that's why I wait for the fourth point to make my lower low.
Okay,
Because
gotcha.
right now it's still not
confirmed.
confirmed. You see what I was saying?
So we're saying the same thing.
Yeah, I was saying that this wasn't confirmed, and I was showing him what it could do to prove that it wasn't confirmed.
So now my next question is, at this point, basically, from the way that from what you're explaining, you're looking for right now, we have no trade. Right now, because
For
it
a
has
conservative trader, you don't. Yes.
yeah, exactly, because it has not broken
Okay.
here or here. I just want to make sure.
Exactly. There you go. Yep.
Right now, so right now we have no trade.
And that's what I was explaining to him. There's a conservative trade and there's an aggressive trade. An aggressive trade would have got in after this low.
Exactly. Now the fractal aggressive, yeah.
Exactly. Would have got in
Aggressive.
after it broke this one.
And now boom, boom, boom. Yeah. Now let's get in here. We out.
You see what I'm saying?
Yeah, I get it.
So, okay. So remember, when I'm teaching you guys, I'm not going to teach you the aggressive because you have to understand. I have to know that you understand all the concepts on why I would have got in here. An aggressive trade, remember, even with an aggressive trader getting in here, they still got this to deal with.
Yeah.
And then they got this to deal with. But you have to know that you have all of those to deal with.
That's right, because if you get in, so let me just make sure. So if I was, let's say get in here, I can only take that to there because this is my next level. And then if this comes up, if I get in, I can only take it to here because that's the next. That we're gonna have to wait for
you
it to
can take
pass.
it wherever the market tells you, but yes, those are things that you want to watch out
But
for.
yeah,
like if you start to struggle, those are your next areas of concern. Yes.
Got it. Yes,
Yep.
got it. Understood. Want to
Got
make
it?
sure.
Because remember, you
I have
gotta
clear
also
clarity.
remember you're on the 32nd. Any price can be manipulated easily on the 32nd. So for that reason, you trade a little bit more careful because, or you have your what I call your trigger finger. You want to make sure that you recognize that I am on the 32nd, and if institutions want to skyrocket this up, they can really easily because it's the 32nd. So I can't take my analysis. It's like, I got to take it kind of with a grain of salt. It's on the 32nd.
Got it.
Get it?
Yes,
Okay.
I totally get it.
All right. Got
So,
it. Okay, great. Go ahead.
Got it. So I just want to all right. So basically, now my next question would be here. Okay, say this comes here, right? I'm looking at this.
Where?
Let's say
Okay.
we're starting
Okay.
from here. Let's say we're starting from here, right? So you have this, and then you have this. So now my next question is, this would be this is one right here, correct? It just broke here. This could be two.
So you're going back to Elliott waves though.
No,
We're doing
I'm
because I'm not counting. You're counting. The reason I know you're counting waves is because this is a high right here. This is a low. So you're counting this whole. This is you're counting waves because I'm only counting highs and lows. You see what I'm saying?
So,
that's what I'm trying to get you to see, that you guys are trained to count waves and you guys are counting waves. I'm not. I'm not counting waves.
So just from because now I'm just seeing my clarity. Let me erase this. So let me erase it.
I keep
So
saying
now
you guys are trained on Elliott waves.
so-
I'm not counting Elliott waves. I'm counting.
so basically right now this would be
points.
one.
That's why I call them points
It's one
instead of waves.
2,
There you go.
3, 4, and this
Just
right
points.
here, deaded this count. So now I got to count from.
There you go.
Now I
There
got to
you
count
go.
from
Actually,
here.
that didn't dead the count. This did. This deaded the count because it made this deaded the count. I'm gonna tell you why.
I got you because it didn't come over
Because
here.
you made a lower
Got it.
high.
Got you.
There you go.
So now I'm gonna count against it. So now this is 1,
No,
here.
no, where did, no, this is
Up top
one.
is,
Oh, okay.
yeah,
one,
up top is one.
Yeah,
1, 2, 3,
and we're working on
1,
four.
2, 1, 2, 3,
Take
4.
this out. You're working
So
on
now-
4 right now. 4 hasn't ended yet.
So now once this break, just broke, so now we gotta wait for this to come back and we take this down.
There you go. There you go. So now you
Got it.
see, I'm not counting. You were counting. You're used to counting
I
waves.
got it.
I'm not
Yeah.
counting waves. I'm counting points. That's why I call them points instead of waves.
Got
And
it.
I
So
knew what you guys were doing because I'm used to Elliott waves. But I'm just saying that I wanted to get you guys to see. I'm not like when that just told the story right there. When you did this and said this is one, no, this is not one, right? That's a wave. That may be wave one. Yes, I see you, Nina, and I was waiting for you. That may be wave one, but that's not the points of a trend. I'm only counting points. Go ahead, Nina.
Okay, so just for clarification, so just in the example that Howard showed.
Oh,
it
I
has
just took
4
everything
points.
out. I'm sorry.
And so after that
Can
4th
somebody
point,
turn down their, I hear
Oh,
news. I
shoot, that
can't
was me.
hardly hear news.
let me go
Okay.
turn this off.
Okay.
all right, so in the example that Howard just showed with the 4 points, and so after that 4th point, you'll wait for the pullback for your entry. Is that correct? Okay.
Right. Yeah, you always wait
Okay.
for the pullback. You don't go on the 4th count because the pullback is like I'm a pullback and then I'm going to enter. So I'm going to get the highest, or lowest available place to get in before it starts continuing back in that direction. And that's when Jay always asks me, oh, okay, can we put a fib on it and see if it went to the 50%?
Got you. Okay.
Now,
That's the
Got
reason.
it.
That's the
You-
reason
you-
for that.
now
Because
you
you
gonna
can
flip.
tell, we know where the places that price usually retrace to. So that's what the fib is for. It's a fib retracement tool. So you can go on and say, okay, it should retrace to here or here or here. We already know the zones that price retraces to. So that's the point. Once it makes this stop, wherever it stops at this 4th point, then that's why I always tell you guys, I take the whole, whatever
See, now-
that whole move is, because
Now,
I'm
right
trying
there.
to see that whole move to see, is it done with, it's going to retrace, and then is that retracement done so I can start taking it down.
Okay, so
Got
now
it?
right there is where you
That's
crossed
where it's
over.
at right now, and it's not done.
No, but see,
Okay,
my
go
question
ahead.
is, okay, this is
Uh-huh.
one. This is one right here, right? Up top, right here. 1, 2. This is 2. This
Mhm.
is 3. Working on 4. Now, if we're going by points, why wouldn't you go from here to here? Because now this fibbing this whole thing is the same exact thing as me counting this as 1. You're counting this as 1, not counting this whole thing as 1 to come back to the 50 over here to come down, or
If
like,
you want to see it the same, then that's fine. You
but
cannot, because how
I'm
can you fib a partial? How can you fib a partial move and say that it's retracing? You
Because-
can't.
To do.
because
We were
this,
Huh?
trained that way.
because this
I
shouldn't come-
understand, but
this-
I understand that that's how. But
this shouldn't
you
come
can't.
back past this. If this comes back past this, then I mean,
Then what? So
yeah,
you telling
it
me
should- it
that
should be going up.
let's talk. No, that's not true, because it can go to I've seen many a times. Let me show you what it can happen. It can come here. It can go to the 786. Remember, it can go all the way to 99 point something before coming down and continuing. So that's not true that if it goes to the 50%, that it's not. Look up retracement, fib retracements. It will tell you that it can go almost all the way back 100% and still continue down. It just means that it is a weak trend, that the trend down is weak. It is a weak trend, but it can go all the way back to almost 100% and still not mean that it's going to continue up. So that's not true. That's not true. And you
Okay.
can look up retracements, and I would recommend that you do that if that's what you were taught, because that's not true. That's not true, because it can come here and go to all the way to here and then continue down.
Got it.
Yeah. So just because it doesn't hit here and then go to the 50%, you know, that's not how it works.
I got you. Just see, and
So
I'm confusing my trading plan. Because my trading plan, if it goes past 618, I'm not getting in that trade. Even
because
though, it can go back and come back down, I don't want that money.
and the reason for that, and that's why I like to tell you guys the why behind it. So with fib retracement, if it retraces, let me go through the three, if it doesn't, let's do this. I'm gonna go through now. This is basics, even though we're in the intermediate class. So I'm gonna give you guys this just to show you guys. So, oops, I need to do that. All right. So if this trend here, if it doesn't break the 23.6, right? It is not a valid retracement. It is a pullback. It's a difference. That means it's a pullback and not a valid retracement. Okay. If it does, it goes to the 38.2. That means, and continues back down. That means that the trend is a strong trend, right? That it went, and I mean, it could break the 38, just doesn't hit the 50. Like, so anything in between to the 50. That means that this downtrend is a strong trend, that it's going to continue going strong, right? Next one. If the trend goes to the 50, anywhere between the 50, 61.8, oops, in this area, this is called the golden zone. If it goes anywhere in here, meaning it can go all the way up to the 786, right? Not just in here, like it doesn't cross into the 786. So anywhere between from the 50 to the 78.6, that is considered a normal retracement. That's a normal retracement. That is the average retracement that always happens. It generally goes in this 50, 61.8 zone, anywhere without breaking into this 786, right? That's a normal retracement, right? I'm going to take some of these off because it's getting to be a lot, right? If it goes to this 786 zone, right? That means that the trend is a weak downtrend and the trend is weakening. So even if it continues down, you have the possibility of it reversing later on in the next waves because the trend is weak. The fact that this was a downtrend and buyers were able to pull it all the way back up, and I call this the last line of defense. That's what I call this, the last line of defense, because this is like the last area that you will see sellers in. So if it comes here, then this is the last line of defense. If sellers don't take the price back down, it's going to go up and reverse, right? We know that it's going to reverse, right? So that's why I call it the last line of defense. And those are Fibonacci rules. They don't have nothing. That's not my strategy. That's just straight fib rules. So that's what the fib retracement model is. It's based off of those numbers. That's how it works. So like, for instance, price where it's at right now. This is telling you right now, based on what we see on the 32nd, remember, we're on the 32nd. So on the 32nd, according to the 32nd and the fib, price has broken the 23.6, so it's a valid retracement, but it wasn't able to break the 38.2, which means that it's a strong downtrend. So by putting this fib on here and knowing that this is a strong downtrend after it comes back and crosses back down, you know that you have a good chance of it going down and you know, so those times when you're not sure, should I hold this trade because it's acting kind of, you know, wiggly, should it, you know, it's going back and forth, you know that, oh, when it last retraced, it, you know, this last swing high to swing low, it was a strong trend. It was strong. So you know that you can stay in a little longer because the retracement was so little. That means sellers were strong, right? Because the retracement was shallow, because this is a shallow retracement, because the retracement was shallow, that means sellers were strong. So you know that you have more, it gives you a little bit more confidence in staying in the downtrend. If price goes up to 50%, it's normal. That's the average. So you know that if you're in this downtrend, that okay, it's average. Well, it's like, okay, if I start to get resistance, I'm probably going to get out, because it didn't tell me that it was a strong trend. It just told me it's an average trend. And definitely if you get in and it was a weak trend, you know, you got in and it retraced all the way to the 80% and you got in at some point in this game, you know good and well, like, I'm gonna have a trigger finger, because it was already, the downtrend had already weakened. You get the differences? That's the purpose of knowing where it retraced. That's the purpose of having that knowledge of where it retraced to. You got that? I want to answer Nina's question because she had her hand up for a long time. Go ahead, Nina.
All right. So just for clarification, I think
All
I
right.
understand both perspectives. I get it. So to learn again how you are seeing and view things, so I'm asking these questions. Okay.
No
So let's
problem.
just say if you were to fit from here to here, and that's
Mhm.
going to be maybe approximately maybe about the 786-ish, maybe.
Mhm.
And so in saying that, my idea is this trend right here is what's weakening. So it may
Mhm.
come down a little bit more, just a touch more, before it gives that reversal, potentially this way. Again, still waiting on those 4 points, maybe.
Mhm. Mhm. No, I get it. But the only difference, that's what all I'm telling you guys is, the only difference in what I'm showing you and what you guys are doing is you guys are doing waves and not points. That
Oh,
is
no, no.
it. That is
Yeah. No, so I'm
that's
just
the
basing this on the fib. So again, if this area right
yeah.
here were to be fibbed, and let's
So
just say
let
it's
me fib it real
approximately
quick.
the
Let's move
seven,
this
eight.
fib.
Okay.
Let's do it. Let's do it.
And so I'm saying like pretty much it would say that this trend would be the more
So
weak
right.
one.
So that
Okay.
trend.
And
So
so
I'm
it
gonna
may
take your.
be,
Can you take?
yeah.
I was
Right.
because they moved, only because they moved out the way.
Yeah.
So basically, so fibbing. I'm gonna go down to this point. So fibbing that, yeah, it's right there. It's in the 786. So I get what you're saying. So this move down now is a weaker part of this whole move. Like you see what I'm saying? So this retracement, yes, it retraced to the 786. So now that it's dropping past this, yes, this is a weaker trend. This move that's happening right now is weak because we look at it after it comes back down here. How far is it going to go down? Yes, you're absolutely right.
Okay. And so now that the trend is this right here is weakening, now it's time to start looking for this particular trend, because this is the main overall trend. We're looking for buys because again, this right here is what's weakening from this trend over here.
Right. But when you guys, yes,
Maybe.
yes,
Okay. I just wanted to make
yes,
sure.
you got that. You got it right.
Yeah,
But you're way
Okay.
ahead of everybody else, just so you know.
yeah.
Ah,
Again, now I do have a
You're way
question.
ahead of everybody else, because so
Can I
again,
get that?
let me just finish up with Nina really quick, Howard. So yes, you are absolutely right. But remember, on the you guys are doing analysis. The way you're doing analysis that encompasses a higher time frame type of analysis, because you're doing actual analysis. You get what I'm saying? The reason that I don't go through and map out the whole overall analysis, remember I said I don't do analysis on a lower time frame. I'm only looking for points because I'm scalping. I'm on the 32nd. So the analysis that you did, remember I said the lowest time frame that I would do that type of analysis is on the 15-minute, where I'm looking at the whole picture. You see what I'm saying? So the reason I only bring up points is because I'm scalping and I only care about this current high to low. I don't care about the other part because I'm in and out. It's a difference. I have a scalper's mindset. So
Yeah.
I only care about this high to low because I'm scalping. Now, if I was doing position trading, oh my gosh, your analysis was perfect. It was perfect. It was exactly how I would do my analysis, my trade for a position trade. But for me, the lowest position trade I'll do is a 15-minute, right? So that's where I want you guys to understand, because we're scalping, we only care about the current move down or up, whichever that is, the current high to low on the time frame that you're on. It's a scalp move. And you get what I'm saying? But you
Right.
were straight on. I wouldn't have went back to the move that you showed previously. Let me see, I can.
Well, I was just wrapping my mind around the 4 points with
Yes.
the Fibonacci. And so pretty much your 4 points are for your entry only.
That's it. That's
your
it.
trigger. Okay.
That
Alright.
that is
Sorry,
all
Howard.
my 4 points is
Yeah.
I've already analyzed the bigger trend from the 15-minute. And I've already looked at, okay, what is the bigger trend doing on the 15-minute is where I go to for scalps.
You're just
right?
getting back into the rhythm with your 4 points.
There you go.
Okay.
I'm looking at my trigger entry. My entry is based off of the 4 points because I know that it's ready, because the 30-second ain't telling me nothing. We already know how many 30 seconds is in one candle, like really, you know what I'm saying? So that's the point. And this candle can go up and down in 15 minutes, and that's a whole lot of 30 seconds. So that's why I'm only looking at that current move on the 30-second time frame, because I'm only looking like what's going to trigger me to get in. That's it. Okay, go Howard.
Okay.
I'm gonna go back to the 30 seconds.
Yeah, go back to 30 seconds. There you go. All right, now this is now I totally agree with Nina. But now once we come here, I'm talking about the last part right
You
here.
gotta annotate it because I don't see it.
Let's come to this last part right here. Now we're talking about fractal levels.
On the 30-second, that's the only one I'm looking at.
Yes,
I'm not
I
even
get it.
looking at this.
So
That's what I just explained to her. I'm not even looking at
yeah,
that.
this don't matter no more. None of this matters no more. None of that matters. All that's noise. Now
Mhm.
over here,
Yes, Donna, you're right.
what I would do is fib that right there. This move right here, once this starts coming up, fib this right here. And if this comes to see where this comes to see if this move will be strong, and then because that's what I want to get in. Now, where would your 4 points be for there? Because if this you
I don't
okay,
I
You have
don't
to drop a
I don't
time frame, Howard.
you would
I think
have
the
to go
4
down.
points.
Yeah, because you don't
but you
you
have it
don't
right
have
here.
4
Look, okay,
points.
you have this right here. Boom, it broke here. It broke there.
So let's do
right
this.
here.
Like take your stuff off for a minute. I'm gonna put it in replay mode so we don't see the rest of the stuff. All right. So you're saying from right here. So
No,
this is when
go. Okay, but go
let me
back
take
to right here. Go back to right here. This is where I would see it, right?
what right here
Cut
to
somewhere
here.
off up there.
Because okay, so here.
Yeah, you cut off there, yeah. Okay, now so
All right.
far right now, this is my right now, this is the bottom right here, right? So now go forward one at a time, and I'm gonna show you what I'm talking about. Okay, so now right there. See, wait. See,
Okay.
this is broken. So being that this is broken, now this begins my first what? This is what brings
What did that break?
it broke this right here. This brings me to the table. This was what brings me to the table. I'm telling you, this what brings
That's
me
not
to the
even
table.
a low though. How would that bring
Kool-Aid
you to
candle.
the table?
Because
You're going off of your Kool-Aid candle, because that's not a low, Howard. That's a high.
but I'm not saying it. This is not my
On
entry.
a
This is
lower
not my
time, you would have to go to like a 5-second for that to be valid for me. Like, this is not a low. I understand what you're seeing, these candles broken, right? But on this, we're talking on this time frame.
okay. So in this
Is
time
not a
frame,
valid. On this
yes, you're
time
right.
frame, this is not valid. If you go down, we could try the 15-second. You know, that's still questionable. Let's go to the 5-second. Like I
There we
said,
go.
now
There we
you
go.
have a break.
Yeah,
So
period.
then you get what I'm trying to say? So
And now
but we're
I'm
not,
not.
You can't mix
Okay.
the two. Remember I said, like, I
Yes.
don't mix the two. If I'm getting in, either I'm going to trade on the 5-second or I'm going to trade on the 30-second. I don't cross my entries I can't, because it doesn't, it's how you get caught up, because the 5-second is going to tell you something totally different than the 30-second. So like on the 5-second, yeah, you definitely have, like, even if I put on my let me take all this stuff up. I'm just going to put on my pivot high lows. Yeah, you definitely have highs and lows there. You definitely do on the 5-second. You have where it violated and broke this structure. But now you're getting lower highs and lower highs and lower lows. So yeah, that's valid on the 5-second. But on the 30-second, it's not. It's not valid. It's still a high. You see, it doesn't even show anything because this hasn't dropped yet. So that's why I'm saying that. That's where you might be looking at it because of how you trade. You know that on the 5-second that this violated, just like I did. I knew that.
Yes.
But again, you are talking from a totally different level. Until you get to that level, you have to explain your way to that level. So I couldn't tell you that, oh, just get in right here, because people wouldn't know. Like that's not a valid that's not valid teaching on the 30-second, because nothing violated, nothing broke. But on the 5-second it did. Yeah. On the 5, you get what I'm saying? So you may know that because you're advanced level, and in trading, you may be able to look at the 30-second and know that on a lower time frame it broke. But but then that, to me, in my opinion, then I feel like you should put your entry on the 5-minute and your exit on the 5-second and your exit on the 5-second, in my opinion, because you're getting in on a lower time frame, but then it's gonna cause you to lose money because you're gonna wait on a higher time frame to get out.
Yeah, got it.
Yes, your entry and your exit need to be on the same time frame because it's based on the same reasoning. So if my reason for getting in is because it broke this level, then I need to see when does it start violating this level, because I got in on this level. You get it?
Yeah.
I need to know when does it violate the level that I entered on, because that would be a signal to exit. But really in scalping, that's not even your signal to exit. Your signal to exit in scalping is my profit. I'm losing my profit.
Got it.
You see what I'm saying? So that's the thing. So yeah, you could, but if you're going to get in on this 5-second violation, because you have 4 points already.
Yep.
You see what I'm trying to say?
So
then make your entrances on the 5-second. That's all I'm saying. Just adjust your strategy. If your eyes is showing you something on a lower time frame, if you're able to look here and say, oh, I know I got my break on the lower time frame, then go down to that lower time frame and enter and exit there. That's all I'm saying.
Got it.
That's it. Just go down there wherever you see that break that shows you true violation, like shows you this, and then you continue on there until it's
wait for this to come up. Wait for that to come
there
up.
you go. And then now you got your signal. Oh, well, you got a signal here that, well, that's but see, so you stay in, but see how it complies with the 5-second.
Yeah,
that's what I'm trying to say. You stay on you don't go back to the 30-second and say I'm gonna exit on the 30-second when I entered on the 5.
Yeah, this should have been my signal here.
Yeah.
And then I would have caught 2 to 3 candles here, and that's my $1,000 plus more, and I'm done. If I want to get back in, I'll get back in. Now this will be the 30-second entry over here. So after this pullback comes, this will be a 30-second entry over here.
But see, everybody can't do what you're doing and say this is a 30-second entry because they're on the 5-second. They got to go to the 30-second and see that that's a 30-second entry. You get what I'm saying? So the questions, you get what I'm trying to say to you? So the question, the way you're asking them, you have an ability to know that this is on a lower time frame, this is a break. On this time frame, this is where your actual break is. You're able to see that, but everybody can't, and it needs to be taught the way that it should be, because you've trained your eyes now to do that. but that's not the way that it's taught. Like you were taught that this is on the lower time frame, this is where the break is. But now you've gotten so accustomed to it, you automatically know that this is a break. Like just like Jay, I think last night said he don't have to pull out a fib. He can automatically see where the 50, 60, 61 point, the 50% area is. He could see it, but I have to teach it in the way that it should be done. And then as they get better, they'll be able to see it.
Okay. Got
You
it.
get it?
Yeah.
Okay. All right.
Yeah.
Everybody understand that? I got some questions in the chat I haven't been able to talk about. Okay. All right. So LaDonna speaking on the mentality. Yes, when you're in scalper on the 32nd, that is not an analysis time frame. That is total scalper mode. So definitely you have to be in a scalper mentality. You ain't, like she said, you ain't supposed to hold it. You talked about that, holding it a couple candles, and that's it. She said, when you think too much on the 32nd, you miss your move, snatch and grab. Yep. So yeah, that's what it's about. And that Nina says she loves this dialogue. So I just want you guys to know, like, the 32nd is just that. It's 30 seconds. It's not like going to give you your analysis that you can stay in the trade forever. Yeah, no, that's not going to work. So just want you to know that you have to do it. It has to be based. Ooh, look at that drop. It has to be based off of what makes sense. What makes sense. And on that time frame, it has to make sense. So everybody got that?
Yes, ma'am.
They understand that dialogue? Okay.
Yes, ma'am.
All right. All right. Well, I was going to show you guys how to trade with TradingView, but this was fun. It's 8:49. So let's see. I'm gonna see what I can do here. So I just wanted to, for those that trade, this is a really good, it's really good if you only trade one account to use the tool, because you could see the actual indicator while you're trading. And so I'm going to put back my stuff on here really quickly. And so it's a good thing that, and I actually connected my TradingView account, Tradeovate account. So that I could show you guys. And so as you can see, once I connected the account, I got this buy and sell up here, and it's in quantities of, it tells you what the spread is up here. It's 0.5 right now, 0.50, so 50 cents is what the spread is right now. The bid versus the ask is what they're talking about. And so when you're ready to trade, you can click this down here that says trade. And there's two different methods that you can use to trade. This is the order ticket, what they call an order ticket. And this is the DOM, and it stands for Death of Market. This is really, I would recommend for now, you guys not use the DOM, just use the order ticket, because it's really closer to what you're used to seeing. And then if you go here, you have market order, which means market execution. As soon as you click the button, it would execute it. You have limit, stop, and stop limit. I would recommend that you guys only focus on either market, and that would be, exactly, you're executing right now. You could put in a take profit and a stop loss. You can do it based on dollars. You can do it based on points. And you can do it based on actual numbers. If you put in a dollar value here, it'll adjust everything else. As you can see, it'll adjust your ticks, your price. It'll tell you where you would be exiting, based on a buy or sell. It tells you all of that. Same thing here. You could do the same thing for your stop loss. You could put in a value, and it'll tell you, where your point is, how many ticks, all of that. What percentage of your balance it is. It gives you all of that. So just based on if you want to do it, ticks, or you want to do it off of whatever. This tells you your risk in dollars. This tells you your risk in percentage. It's just up to you to do that. And then you can put this is how many contracts. It gives you your risk based on how many contracts, so that's how you would do that. And then you would just click buy or sell at that point. So that's market execution, right? Now for a pending order, like say for instance, we did an analysis, like say we did an analysis when it was back here and we said we was going to enter, you know, once it dropped below here, we was going to enter here and what did I do? This, oh, let me see. Let me go back. And this is my profit, because I'm gonna do, oh, well, let's do it like this. Let me do it. Let me cancel it. Let me do it like this. So say for instance, this is right now, it's on a buy right now. So it's saying we're going to do a buy and I'm saying I'm going to buy when it gets past here. Like say it passes this, I'm going to buy and my TP is going to be, I'm going to do my TP to this resistance zone. And I want my stop loss to be down below here, right? So this is based off of 5 units. Let me put 1 there. So say I'm only doing 1 unit, it's going to tell you this is how much profit I stand to make. This is how much risk, you know, so how much I stand to risk. Maybe I want to move it up to here, you know, make it closer to a 1-to-1, whatever. So you can move it up and down. And then once you're ready, once you get it where you want to get it to, you can click buy. And then it'll be a pending order. It won't open the order until where it gets to the point you moved it to. So that's the way that you guys can do, can utilize while you're in TradingView, and you can use it against the indicator for all of those things like we were talking about. Like he said, this is where I would get in, this is where I would get out. And you can move these, you know, while you're in the trade, you know, after you can move it even after you've already entered the trade. And this being on the screen, until you click buy here or buy here, it does not activate. And this is a pending order. So this is not a market order, it's a pending. So I recommend, especially when you're learning it, that you put it on stop rather than market execution, in case you might do it on accident. Because like, for instance, if I accidentally click buy right here, right? Like say I click buy, right?
Order rejected.
Well, they rejected my order because it was too big. But anyway, but if I did, let me see, I didn't mark the account. That's why too. Let me get, let me pick account. All right. So say for instance that I went here and, oh, I can't trade. I got to do the micro account. Let me switch this. Sorry, you guys. It doesn't let me. Oh. We're going to have to slide it. All right. Okay. So you need to click both of those on, and then you'll see it'll start to go on the screen. But say I want to do a buy and I tell it I want to do it there. This is my stop. Just say that's my order, right? And I click buy. It's a pending. You see that it says the order sent. This is all there, right? If you go to down here, you'll see I have, oh, I gotta raise this up. You'll see that I have an order that says working. That means that it's pending. It hasn't activated, but it's pending. So until it hits here, it's not going to take that order. So all up until it takes that order, I can click X and it cancels the order. And you'll see that that order was canceled. So that's why I say it's good for you guys to work in. If you wanted to do this, you could work in a pending order. This is one of the ways that you're able to put in a take profit, a stop loss, and all of that. Whereas when we're working in Tradeovate, you can do the same thing in Tradeovate, but the difference here is you can have it match up with the indicator and where you see different support resistance zones, all of that. So that's the benefit of using it in TradingView, because you can do the orders from there. Of course, you can do your regular orders by just clicking buy or sell over here and putting in the quantity, you can do the same thing there. Now, remember, you can't do this. You can only do this with one account at a time. You can't do group accounts in TradingView for that. But again, it's a great way to be able to create position trades based on what you see on the chart. Unlike, when we're in Tradovate, we're looking between two charts to kind of figure that out. So that's one of the benefits of doing that in TradingView. Anybody have any questions on this? Jay, go ahead.
I have one question and then some information about Tradovate and TradingView.
Awesome.
I noticed if you're trading the same instrument on Tradovate, if you put in a stop loss or anything like that on Tradovate, it'll do the exact same thing on TradingView as long as you're on that same symbol. And you're
Right.
able to move it. When I do that on Tradovate, I'm able to move it on TradingView a little bit better. So that's what I
Yes.
do sometimes. I just post that stop or that buy stop, and then I just move it on
You
TradingView
plan to
because
move it.
I'm
Yeah, it's
I'm
easier.
able to it's easier to move it.
Easier
It's
to
because on
navigate.
Tradovate you really can't. It's kind of weird. So
Yeah, you're right.
that's for that. But the question that I have for you, is there a video that I can access where it breaks down your process of scalping from beginning to end? That way I can look at it a couple of times. There's not one.
No.
Okay. All right.
No, there's not. There's not, because again, so remember this. I want you guys to keep in mind that it's not that how can I put this? I don't want to say like it's not that it is a strategy, but it's not a strategy. It is, but it's not, because the strategy is, how can I say this? It's based off of a trend. Like it's just saying a normal, it's really not a strategy. It's just when I know that this direction, not the trend, not the overall trend, but when I know that the direction of price is moving in one direction that is validated by 4 points, which consist of a trend, that is an entry signal for me to get into a scalp. A scalp is a quick snatch and grab, a couple of pips here and there. It is not, I guess you can call it a strategy, but it's really not. It's just, I know that this is going to go in this direction for at least, for a few pips. So I'm going to get in and snatch and grab it. I'm not going to hold on to it. I'm not doing any of that. So what I'm using all of my knowledge that I have about trading. I'm using my knowledge about support and resistance. I'm using my knowledge about, you'll hear me sometimes talk about divergence. I'm talking about the RSI is at the bottom. I'm only going to get in it when it's at the bottom. If I'm buying it at the top, if I'm selling, I'm using all of those pieces to come up with a quick entry point. I don't need a full analysis. That's why you guys don't see me go in and do an analysis on the chart beforehand. I might go up to the 15-minute. And the only reason I'll do that is because I want to see, should I be in buys or sells? That's it. That's the only reason I'll do the analysis, because I want to know, do I have, which one? Because in the scalp, you could do both. You can buy and sell every time, right? If you were more aggressive, right? Every time you could just use the RSI. Every time it's at the top, I'm gonna get in the sell for a couple of pips. Every time it's at the bottom, I'm gonna get for a buy for a couple of pips. But you have to be finger on the trigger for that, right? So for me, it's not necessarily a strategy as it is a mindset. It is a mindset. Now, all of your skills and all the things that you know about trading helps you to be more successful at it, because, and the reason like I said, I gave you guys the reason I used the 4 points. I used the 4 points because, again, in order to make money in the market, price has to move in the same direction. When price is moving in the same direction, it means it's trending. When it's trending, I know that it's trending by 4 points. That's as simple as it is. And so that's why I use the 4 points rather than a cross or anything else. Because people use, you know, EMA crosses as a reason to get in. People use all kind of things as an entry strategy. Mine just for me, logically, it makes sense that if it's in the trend, it's going to keep going in that direction. And that's when I make money. So, yeah, it was never, you know, I really want you guys to understand it's really more about a mindset. We have been trained to, you know, do an analysis, take a position and stand on that position. You know, in the beginning, when I was an early trader, it was really hard for me to stay in a position during a pullback. I would be ready to take my money like, oh no, y'all tripping. So I had to teach myself to stay in that position and let the trade play out. Right? We had to teach ourselves that. Right? And that's a mindset. When I am position trading, my mindset is stand on your analysis until it tells you something different. That is with position trading. With scalping, it's staying the entry until you start to lose your money. Different mindsets. Did that help? Hopefully.
Got it.
Oh, I'm
And
sorry,
that's
I
why
was in a break. My bad.
that's okay. That's
Yeah,
okay.
it helped out. It helped
And
out.
that's why I would say, like, for me, because you don't have to do, you could use the trade manager to do the same daily bread type of trade where you're taking a quick scalp. Like, if you're not able to do it yourself personally, let the trade manager do it. Do the same set, but instead of doing 3 trades, do 1. Instead of having 3 take profits, do 1. Do it in the trade manager, or you could do it in the daily bread and then just make your settings closer. And every time use it, you can make all your TPs the same. There's a lot of ways that you can use the daily bread to be your scalper. If you can't do it because you don't have the discipline, if you don't have the discipline or you're not, you know, you're going to try to hold on, let the daily bread be your scalper. Go ahead, Jay.
All right, I know you got to go because it's 12:04, and I don't want Ms. Booker to be yelling at me. So, so my quick question to you is like, on something like this, when you're seeing it at that demand level right there, right, and you're scalping, you see that you have your cloud with you, you see that it's currently going down, but down the low, if you see the histogram, how's it going? It getting dark, and would you wait till it get green and wait till your RS get up to the top and then take it go down? Or would you
Okay.
take a
So
shot
I'm
at
gonna
it?
talk about where it's at right now. Okay, so let's talk about all the things that we know about trading. So let's go to the histogram first. We're gonna go to the histogram first. So we're gonna go from this low to this low that it may be creating because it's not really finished. So if we was to put a trend line on this low to this low and a trend line on this, which is the low, this low to this low, which corresponds, what do we see there?
Divergence.
Exactly. So even though you saw those dark lines, you also know that there's divergence here, right? Not only do you see divergence, do you see this rejection candle? If we do candle, let's talk about candle language. Is
Yeah, you
this
got wick.
you got it? You got a rejection. This is a rejection camera, a hammer, right? A rejection candle there. You also are in a resistance zone, right? This demand level, as you said, demand level.
Yes,
So
ma'am.
why would I continue down? It does not give me reason to continue down because of all of those things. This gives me, when the minute I see divergence here, it gives me, that's like a wait a minute. It doesn't mean stop. It doesn't mean no. It just means, wait a minute, let's see how this plays out. Right? That's what that divergence tells me, because it's 30-second divergence. It's not like it's divergence on the 4-hour. You know what I'm saying? It's divergence on the 30-second. So, but it still tells me, wait a minute. That's what divergence tells you on any chart. It's just how strong that divergence is based on the time frame. So this already told me, yeah, I'm not taking the trade right here yet, even though I saw these dark. This told me I'm going to wait. And of course, my RSI also told me that I'm losing momentum. I'm at the bottom of momentum. So that's all of these things that I looked at, the RSI, the divergence, I'm at a resistance zone. you know, I got a rejection candle. Even if you don't look at any of my symbols, you know, don't look at the cloud or any of that. Just those factors tell you without the indicator that this is not an area that you should continue in yet. You should wait to see what's happening, because you got why I would wait.
Yeah, I was just making sure that I was reading, getting the same information you have.
Right.
So yeah, unless it breaks that demand, once it breaks that demand, if it breaks that demand, then you
Not
will get your 4
necessarily.
points. You'll get your 4 points
You
after
already,
that
you've been had your 4 points. See,
from
you
the back,
guys,
right? From all the way back
you've
there,
been
right?
had, because this is the high to low. You've already had, this is the high to low. There has not been a violation of this downtrend yet.
Yeah, okay.
So
That's what
you
I was.
already
All right.
have your 4 points. You don't have to, you're not looking at 4 points anymore. You're just waiting for every time there's a pullback to get in. So every time you got a pullback and you validate it. So that's why I talk about, I like it to take it back and then come back. So you got this, see that little green dot telling me that the buyers are taking over. You went, you know, you went to a major SR point. So we're going to see, is it going to break through or is it going to be stopped there? Is it going to be stopped at this major SR pivot, or is it going to, or not? We're going to wait. Our RSI is at the top, right? So we could be poised for a trade at least down to here, at least down to this area. We don't know yet because price is still below. I'm sorry, the trend line is still not crossed. It's kind of look like it's crossing a little, but not really crossed all the way over yet. So when price comes back below here, you get your red and you get your white back down here, you could get in. Now, how close you are to here when you get that, I don't know. But that would make my determination if I got in before it hit here or after. That's where my determination would be based on. How far am I away when I get my signals to the next resistance zone?
Yes, ma'am. All right. Appreciate you. All right. Thank you.
No problem. All right. All right. Anybody else have any more questions before we head out before tonight? No.
Nope.
All right. All righty then. You guys have a
Thank you.
great. Oh, Charles, you raised your hand. Yes. Did you mean to raise your hand, Charles? Maybe not. All right.
You better leave.
Sometime it
Go.
gets stuck. Charles.
Okay.
Run.
All right. All righty. So you guys have a blessed day. I'll talk to you guys later. I'll see you guys tonight. You guys have a great day. All righty.
Hey, Charles,
Bye-bye.
if you need anything, hit me up, Charles.
He looked like he hung up, so maybe not.
All right.
All right. All right.
Thanks
Bye-bye.
again.
All right.
Bye-bye.
Bye-bye.